Welcome back to the Nadlan Forum Podcast Daily. It's Lior here, and today I gotta tell you, this one's a bit surreal for me. I still remember when just moving funds from an Israeli bank to the US was a headache, let alone talking about Bitcoin or Ethereum helping you land a mortgage. But here we are, 2025, and the Trump administration is actually pushing for crypto to be counted by Fannie Mae and Freddie Mac when you're applying for a home loan. So, let's break down what's actually happening. The FHFA, think of them as the big watchdog over Fannie and Freddie, announced not that long ago a directive that's basically saying, hey, let's look into how crypto assets might fit into mortgage risk assessments. For the first time, if you're applying for a home loan, there's a real chance you could include your digital assets alongside your stocks, bonds, all that. It's sort of wild. You just list your Ethereum or Bitcoin portfolio right there with the rest of your investments. Now, FHFA Director Bill Polt said the initiative lines up with President Trump's goal of making the US the crypto capital of the world. I gotta admit, that's a pretty bold vision, especially when you consider how traditional mortgage lending is. Polt put it like this: they want to prep the housing market for, quote, the next generation of financial innovation. These are his words, not mine, and honestly, it really feels like a part of that whole there's no going back now moment for crypto, at least on the policy side. And look, I've already started seeing this come up in real life. Just last month, I had a client, let's call him David from Queens. He's got a sizable chunk of his net worth in Ethereum. And I mean, not some tiny speculative play, but what I'd call real mature holdings. He asked me straight up, Lior, is there any way this could help my mortgage approval? It's most of my money. Until now, that question was always a polite no, maybe a joke. But if these proposals go forward, that could actually be a serious yes. It's just a whole new angle for folks trying to get into this tough housing market. I mean, with home prices sticking near 400 grand and rates not letting up, people are looking for every advantage, crypto or otherwise. Now, as you would expect, the response to all of this is kind of split. You've got some real heavy hitters supporting it. Senator Cynthia Lummis out of Wyoming, huge crypto advocate. She's not just waving pom-poms from the sidelines either. She's actually introduced a bill that would make this all official, put the FHFA's new policy into law. Her take is basically people's asset portfolios are changing and our mortgage system should reflect that. Not sure I'd phrase it exactly like that. Hers sounds a bit better, but the gist is crypto's part of modern wealth. Let's recognize it. Even Darryl Fairweather, who's chief economist over at Redfin, is on board, at least mostly. She said, and I might be misquoting her, so bear with me here, but basically, reviewing someone's crypto isn't that different from looking at someone's stocks. Both can swing up and down. And honestly, she's right, especially with the big coins. Bitcoin, Ethereum, they've matured. I mean, are they volatile? Sure, but we've seen some tech stocks crash much faster. Globally, it's not just some US-only experiment. Places like Switzerland, Singapore, even the UAE have already dabbled with crypto collateralized loans for real estate. The question is always risk management, though. That said, their housing systems are pretty different. And, well, I always get asked how the US market compares. Personally, I think there's something to learn from the cautious approach over there. Switzerland, for example, they really limit how much of your crypto value they'll even count, if at all. Still, this isn't all roses and rainbows. There's a big-time skepticism, especially in Congress. I mean, a group of Democratic senators has already put up a stop sign, writing a letter to FHFA Director Palte, and basically saying, wait, are you nuts? Okay, I'm paraphrasing, but you get the idea. Their big argument is about crypto volatility, price swings of double digits, sometimes just in a day or two. They're worried we could accidentally introduce some new 2008 style risk into the whole system if we're not careful. Beyond politics, folks just want more transparency. How will these crypto holdings actually be valued? How can we guarantee lenders don't get over their skis and start lending on, like, meme coins? I'm with them there. Strict oversight is a must. Nobody wants to see crypto speculation destabilize the market, especially after all the other shocks we've had in the past decade. That brings us to maybe the most important point. How do you innovate without making a mess? The FHFA isn't talking about making crypto the only thing that counts. More like, let's cautiously count a portion of it. Maybe the way margin lenders discount your stocks. So if you've got, let's say, 50 grand in Bitcoin in your wallet, maybe lenders credit you 50 or even 30% of that toward your assets. That's one way to tackle volatility and avoid inflating borrower profiles with paper gains. Another thing they're looking at is transparency. Full documentation, up-to-date statements, maybe even requiring a holding period so you're not just proving you bought the coin yesterday to juice your application. Makes sense, right? You want to see some real consistent value, not just a screenshot of a green spike from a bull market rally last week. But here's the potential upside that's honestly worth watching. This could help level the playing field for some of the folks shut out of home ownership. As we've talked about in past episodes, affordability is a huge barrier these days, especially for younger buyers who've been priced out by high rates or just never got into the stock and bond game. Now, a lot of those same folks got into crypto early, sometimes by accident, sometimes intentionally. If this system is set up responsibly, it could actually help them compete, put them in the mix with traditional buyers. Look, no system is risk-free. Not stocks, not crypto, not even your good old-fashioned cash under the mattress. Lenders are basically being told, if you're going to count crypto, treat it with extra caution. Make your risk models super conservative, and let's avoid inflating values. We'll have to see exactly what Fannie Mae and Freddie Mac come up with in their proposals. They're supposed to turn these in to the FHFA by early 2026, and only then will we know what all this looks like in practice. So that's where things stand. It's an exciting time, but one where details really matter. We'll keep tracking this push for mainstream crypto in mortgages. And of course, I'll bring you updates as proposals drop and as lenders actually react. Stay tuned and don't hesitate to reach out if you're curious about how crypto could shape your path to home ownership. Until next time, from NYC, this is Lior signing off.